back to Be Great Economics. This is Nate. Today is Tuesday, and we're going to be going over a market update. It is the 28th of December. The NASDAQ has been our main runner in the stock market throughout most of our recovery phase. Really, the past decade, it's been the driver. Tech has been the focus, which makes sense. Again, innovation drives most momentum in investment and speculation. But what I will point out here is that we've had this long channel, this kind of what I think is generally a bull flag here of ascending confidence and then a lot of sideways chop. These rallies have not been good. We've had gaps up and then a lot of chop. And so I have this trade system that I've been kind of like an investing theory where I'm trying to execute where I'm going to turn $1,000 into $1 million with 10 2x trades. And I had the first one go well. And then as we entered into this zone, it's just been a mess. No matter what I'm investing in, it's just been sideways. And I don't want to get my investment completely chopped into pieces. So I'm just going to wait. This is not a amateur single option area. This is a much more complex area to trade. So overall, this isn't really striking me as a topping pattern yet. This is more a area of confluence and confusion as the market tries to figure out what to do. And as we've seen, we have some stability here. I know some people have said some bearish things about the RSI. I saw Game of Trades bring up that there is a divergence in the direction of the RSI versus the price. But I will say that we do have a descending RSI. We've broken above it. We're coming down and kind of retesting it. So maybe we can reset, recock, and get moving in a more healthy manner. But we are going to continue to see this chop for a little bit, I think. We are seeing some opening on the MACD as we've had an ascent from here. So it's kind of it's getting started giving us signals for momentum, but it's just not very strong move. And so we may get a little more sideways, we may get some more dips. Overall, I don't really have a position here to talk about, and I don't really see too much to pay attention to at this time because we're waiting and seeing. And this is the hard part, is just sitting on your hands and doing nothing while price does something. As far as the S&P 500, we've seen a little bit more strength in the movement, but these momentums have still just been very violent and weird. They don't relate to much. We're seeing a lot of these small caps, and we're seeing a lot of similarity between the S&P and the NASDAQ right now, but we're seeing a lot of the small caps sell off and the big caps grow, and this may just be institutions going through selling phases in order to try to be safe, because you know that in a chaotic environment, at least the big caps are less likely to go bankrupt or fail. And we have a history in our economy of too big to fail, so these big institutions are more likely to survive. So right now, there's just too much confusion on whether or not there's going to be some type of recessive action. They were still deciding on what happened with the Build Back Better, what's going on with the Fed taper. There's too much confusion and too much fear in the markets right now that even these rallies are weak. There's low interest in them. So just things to think about right now is that even though you could have made some money buying these dips, and maybe this is an accumulation phase, I don't think this is a topping pattern. So if you've gotten these, that might be okay. But again, the bottom of the channels on both of these is still available, and so we want to watch whether or not we're going to come back down and retest. I brought this up on my Twitter, showing that the NASDAQ price in the S&P 500 has gone on this trend of basically setting above the prior all-time highs in 2000, and we are essentially replicating a psychology of a market bubble. And this phase right here is kind of a consolidation. And back in earlier this year, when this dumping was occurring and we were coming back up and testing this, I started to think, you know what, this may be a distribution topping pattern. We're going to come back down, and the S&P is going to outperform for a little while, and we're going to get a little bit sideways. Maybe inflation will spark some of those negative fears. Nope, I was wrong, and so I stopped myself from making bad decisions once we started crossing this area. And so we saw from then on that this has been generally an uptrend rally in the NASDAQ. And what I think is it's trying to accomplish here is that tech is a very interesting set of investments to be looking towards the future. We're going to see human robotic replacement, AI. We're going to see a lot of things really grow in the future, but we're talking 10, 20 years, not next year. And so investments tend to be a future pricing mechanism, and we go overvalued into bubbles. And I think the likelihood of going into a blow off top, the NASDAQ versus the S&P, is extremely high in sort of a crack up boom melt up as we head into high inflation, meeting deflationary incentives. And I talked about that on my Twitter. You can read more there. But basically, the potential for a recessive action, whether it's an actual recession or just a stock market crash, is continuously growing. At the same time, pressures to release into these small caps can cause a rather high uptrend when the confidence resumes, even if it's a small amount of confidence, because a bull market is basically looking for any reason to rally, and it's doing these liquidation plunges to test its bottom. So, the US dollar index. I don't give too great a credence to the DXY as a basket of goods or a basket of currencies, but I will say that we've seen that there was an inverse relationship or a correlated relationship to the fall of bonds or the high price in bonds and the fall in the DXY to an extent. And part of that was probably people selling their dollars globally, and then Americans and a lot of other big institutions buying up bonds. And so we saw a bid up here in fear. As that fear alleviated, we went into a little bit more of a risk-off mode, but we see that as the bond yields rose, the dollar started to get bid up again. And so once we started seeing that trend occur, we're kind of seeing a little bit of an inversion here. And what I believe that this is telling us is that foreign dollars or foreign currencies are more at risk right now of inflation than the US dollar, but the US dollar is still inflationary. So your best bet as a bank or institution is to try to add your position in bonds. So when the bond yield raises, you buy a little bit more of it. And so it's kind of suppressing this. And yes, this is where I believe that if there is yield curve control, that since this is where the federal funds rate, or the federal funds would begin to become insolvent over the long term, this is probably where we're putting some suppressive pressure in bond purchasing or incentivizing it through the banks via market repo action. But what I think is occurring here is generally we are going to start trending up on the yields for a little while, the 10-year for a little while, because of inflation fears in the short term, realizing that maybe this isn't as great of a trade as it could be, but I don't think we're going to see a massive blow up in it because the inflation fears are not the only fear out there right now. There's a lot of deflation fears, and the market is still arguing over this via price. So when we look at the gold price here, when we're talking about, countering the dollar, I think that generally these were bottoms that we're going to see, this massive liquidation followed by this trend. And I am going to post a hypothesis here soon, but basically following a liquidation event in a bull market rally and then having these rally tests are starting to show me a trend that I really want to discuss as a potential for identifying bottoms or preparing to rally actions. It's essentially an advanced view on Wyckoff accumulation. But regardless, what I think is happening here is still an accumulation phase, and we're going to continue to see gold generally uptrend. But I'll take you to silver, and you can see that my Wyckoff accumulation assumptions are actually going very well. But what concerns me is whether or not we're going to get type 1 or type 2, because type 1 implies that we're going to get this spring test here, and what concerns me is that the kind of event that would cause a liquidation below $20 at this point in time is probably a major market action that would be extremely catastrophic. And so this brings me to believe that now this could wipe out the rest of the Wyckoff action because we could get it distorted by how far it could go, say 2008 level crash. But I don't know if I have much conviction in that occurring in such a short amount of time. I think it's more likely we get the rally, and then if something else happens, we go down. But price targets, all right? I don't like to do too much on price targets because everybody gets mad when you're wrong. But general measurement, generally, again, I'm not a professional trader. I am an investor who likes TA, so take from that what you will. But generally, you can see this as an inverse bull flag, and you can be sure that the price range here from down here to here will be the inverse on Wyckoff accumulation. Now, if you get a spring, you should see even more price action to the upside, but basically your target range is around $28 if this all plays out. You still want to see this buy up, and you want to see volume increasing once we get into this area. Volume won't really increase except for a small spike in selling, and then you're going to start seeing the green candles take less effort and red candles take a lot more effort, meaning bigger red volume candles. in order to make any for what they get out of them, in order to show positive buying pressure, and that's gonna attract the speculators and the traders, and then that's gonna send us up. So yes, this is a long setup for basically a 20 to 30% gain. If you're buying bullion, this is your basic line right here. So at these prices is where I would be like, yeah, these are the dip range, by the dip kind of mentality. If you're buying stocks, I would have been buying back here. I would be kind of waiting to see what's going to happen here before it makes that upturn, because if you already bought here, great, but if you're buying above this area at just under 23, you're kind of stretching yourself thin here on whether or not you're going to get an uptrend, because this could not come up as high as here and maybe not advance you as much. For Bitcoin, now we know that this has a very strong correlation to bond yields. And what recently happened yesterday, we saw from Will Clemente, he pointed out that funding went positive. Now, funding going positive means that the futures market is basically paying the shorts to stay long. It's costing them more effort and money, and that was kind of a good thing here, because they basically made sure that we didn't just get massive liquidations all the way down. On top of that, I was having a discussion on Twitter with someone about whether or not whales were currently net buying or net selling, and they were correct in that the whales were net selling along this downtrend. But then as we got into this wick liquidation, it's reversed again, and we've had this uptrend in whale buying. So I've said again is that generally we've seen them follow the price line with buying the dips, and then when you get liquidation events, they'll sell off along the way beforehand, and then they'll pressure the liquidation event, and then they start buying massively. So this is still a net buying range in that their trend is up. And so overall, we're just still seeing supply become progressively illiquid, regardless of whether or not the price is going down. This is a divergence. And then from Jordan Lindsay at JCL Capital, he's pointed out that this trend is generally the same here. And so I just took fractals on it just to show that it could be. And this is the trend that I'm talking about, that I'm going to try to do a little bit of a paper or presentation on, about how this could be a sign of low supply testing before a liftoff. And you see it again here, and seeing it start here. So we don't know where it's going to go, but this general convergence of lines is my big concern. What happens when we breach any one of these headed down this way? We're going to start seeing more negative pressures. So if we're going to have liftoff, ideally I'd want to see it happen into this channel. I want to see it stay above all of these by the time we're down here. Because if we're not, I'm going to invalidate my bullish moves. I'll hedge with some shorts, and I'll drop any long positions I have remaining, and then just let it do what it's going to do until I figure out something else. So just for safety's sake, but for now, I'm generally bullish from this area, and I'm not really concerned about inside the week moves until they break down below that 44,000 line range. And so Bitcoin market cap dominance, overall, just in terms of the altcoin market cap, I think what we're seeing here is, again, a form of kind of a accumulation into Bitcoin, where we keep smashing down Bitcoin against altcoins, which is generally good if you're investing in altcoins, but even they're dripping and bleeding right now too. And so what I would say is that if we do have a breakdown here, it might be a spring event, and then you're going to get a strong resumption. And Bitcoin has a history of pushing down to the limits, testing it, and then rocketing up, and then the altcoins take over, right? And we shouldn't expect Bitcoin to be the sole coin by market cap. This space is going to grow. We are kind of in a dot-com bubble where basically any garbage product can be presented as an idea that's, hey, this is a concept, and then have no other information other than it just exists, and it, not have really credence to why it's going to stick around. But some of these base ones, things like Bitcoin, are probably just going to keep staying alive. I don't know how or why or how much it's going to be worth in the long term, but it has a valid play here, and I have a general thesis on how it's becoming a counter dollar trade currency that doesn't have influences by paper markets very strongly. So overall, bullish on Bitcoin even as market cap dominance, but regardless, I think that you're going to see a general uptrend continue as long as we maintain these current price levels and we don't get liquidations or macro events that cause us to fall by proxy. So thanks for watching. I'll see you all next time.